I've been thinking a lot through this, actually. I'm trying to think like 10 or 20 years ahead. Okay, so let's say the Bitcoin maximalists are right, and Bitcoin is the kind of the predominant store of value and currency. Well, in that world, it becomes the denominator against which we judge all assets. Now, if it's so deflationary that it goes up in price all the time, it means that everybody else will only put their money in Bitcoin and not other assets, unless you get short-term cyclical moves in other assets. That would tend to make Bitcoin outperform all assets, which stops all productive use of capital. It drives M2, money supply, Bitcoin money supply to zero. So I don't think it's healthy over the long run for it to be a deflationary asset. We kind of are stuck in this inflation deflation world that we live in right now. That there's a huge bunch of debtors, so people don't want deflation. And then savers want deflation, but not inflation. But if we go into a world where the denominator keeps going up against everything, i.e. everything else deflates against it, that's a problem. Because as a business, you earn less and less money every year. So, I'm not entirely convinced that this is a good thing. And for this reason, one of the reasons, I don't believe that it is the only asset. I think it is a pristine asset. It has attributes, but it won't.
Renowned economist and Real Vision founder Raoul Pal is highly optimistic about cryptocurrencies, particularly Ethereum. He envisions not only Ethereum but the entire crypto industry experiencing a 200x growth in the next decade. In an interview with Dr. Julian Hosp, Pal explained the potential implications of Bitcoin becoming the dominant store of value and currency. He expressed concerns about Bitcoin's deflationary nature, which could lead to an unhealthy concentration of capital and hinder productive usage. Ethereum has also transitioned into a deflationary model, leading Pal to believe that it won't be a zero-sum game with a single dominant crypto asset, but rather a digital realm with numerous participants. Pal also emphasized the significance of network effects in the crypto space and challenged the maximalist viewpoint that utility tokens will trade at the cost of electricity. He believes that the entire crypto industry has immense growth potential due to adoption effects and the emergence of a parallel financial system. Stay tuned for the conclusion of the video, where I will analyze Pal's argument. Additionally, Pal shares his insights on alternative coins beyond Bitcoin and Ethereum that he finds valuable.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Yeah, I just don't buy into that argument. I understand there's a probability of it. So, I'm not saying it's a 0% chance. There is a probability. This whole idea that anything that is a utility trades at the cost of electricity, I just think is false. I think it's false because of Metcalfe's law adoption effects. And we've seen that time and time again. Now, when John Pfeffer wrote the paper that everybody refers to, every Bitcoin maximus holds as like, here is the prophet of truth, he basically wrote off network effects. So I went and proved it, that network effects operate perfectly in Ethereum. In fact, it operates in every one of these. In fact, all new technologies are network effect driven. So I don't believe that utilities have a zero function. Some that are badly designed may do, but most I don't believe will. The hard question is which ones are going to succeed and which ones aren't. I don't know the answer to that. So there is a maximalist school of thought is we all got caught out in 2017 because we bought these tokens and they went to zero. Guess what? They were all early stage projects. And if you understand how the VC world works, 80% of what you invest in is going to go to zero or go nowhere. And it's really the 20%, 10%, 5% that you make the money in. So what was the one out of 2000 that did well, out of 2017? Ethereum. Will it outperform Bitcoin over time? Who knows? I think for a period of time, certainly. And I think over a longer period of time, probably. So how I look at this is Bitcoin is currently $1 trillion-ish, and the rest of the spaces call it $700 or $800 million. If I look at the equity space, or the fixed income space, or the credit space globally, they're all about 300 to 500 trillion. So if this is truly as disruptive as we think it is, which is the internet of value, then it's going to be worth something like that, if not more. So the whole space looks like it can go to up 200x from here, at least. Okay, that's, we've never had this before. Whole asset classes going up 200x. But that's what adoption effects do. And that's what this whole parallel system that's being built. We know we've got this broken system that we live in now. You know, whether you're European, Japanese, American, we all know that we've got this debt burden system where the banking system doesn't function. There's a terrible disparity between the rich and the poor. Wages aren't increasing, all of the problems that we've got. Then over here, there's a bunch of really smart people in the thousands or tens of thousands who are building an alternative system. And people are slowly migrating across. And that is not just a system of money. And that's where a lot of the Bitcoin people get confused between money and value. Assets have value, they don't have to be money. A Picasso is not money, it is value. So I think those two things are different. And I think once the whole space builds interoperability, you and I won't care what platform we're buying and selling or streaming on. You know, you'll be streaming for money in real-time payments and you don't care whether it's on Tron, whatever. I mean, it's irrelevant to you as long as you get paid whatever source of money you want, be it Bitcoin or euros or dollars or whatever you choose. You know, it's that early stage that people are fighting over the wrong thing. I see value in the space. I'm not smart enough. I don't have enough bandwidth to go through all of these because they all sound super interesting, right? Everything's like, oh my God, that's incredible. Oh, wow, that sounds amazing. Problem is what's going to get network effects and what's not? What's going to find the use cases? What's going to find the developers? I don't know. Ethereum, for sure. I mean, that's a surefire, major platform that is going to play a major part in the future. Regulation is so far behind what is going on. Again, go to the gaming world where there is gambling, there is earning money, there is all of this stuff, right? It's non-regulated. The gambling side is slightly regulated depending where it is. It's all non-regulated. So it's moving really fast. Regulation is so far behind, they still are calling things securities versus non-securities, which is rules that came out in the 1930s. Right, the whole regulatory rule book is going to get ripped up and thrown out and redefined. It has to happen. This is not a marginal thing that's coming at the peripheral of the financial system. This is most likely, in my view, to be the future of the entire system. So you're gonna have to rewrite the rules, and that's okay, but they're a long way behind that. But they will get it once, the ECB, the Fed, and everybody else are introducing digital currencies. They're going to realize that that whole world is gone and everything has changed. So, the whole regulatory rule book is going to get rewritten over the next 5 to 10 years. So yes, it's slow to get stuff like real estate tokenization off the ground. Certain jurisdictions can do it, certain people can't. That's okay, it'll come. I think there's too much happening already to keep our eye on than having to think about all of this as well. I think it is happening. And I could talk about this migration. There is a new world. We've just found America. And people are moving. And all the frontier guys, you and I, we're already spending time there. So it's going to rebalance the power of the world with this new digital world, because this is a new financial system that has a better chance of working. And it may continue to work for another 50 or 100 years, who knows? So I think it ends with a whimper and not a bang. If it was going to implode, I had a serious sit down with myself, because I thought the next recession, so a few years ago, the next recession, sure, the crypto world and the macro world would collide because of debt. But what happened was we had the biggest recession any of us will ever live through, and nothing happened. Mm-hmm. I'm like, wow. But what did happen was asset prices accelerated because denominated in the G4 central bank balance sheets, they outperformed. Yeah. They were just offsetting it. So if you look at the S&P or the Eurostoxx or whatever you want to do, divided by, let's say the S&P divided by the Fed balance sheet, is exactly what we have in our heads, which is after 2008, it just traded sideways. But on the chart, it did that. It's because the denominator's wrong. People were like, oh, it's going to debase the dollar. Yes, it debased the dollar and the euro and the yen and the RMB and the Aussie dollar and the South African rand at the same time. That's what people don't understand. So that is going on. The governments have three choices in central banks, which is taxation increases, which is going to happen. There is inflation, so yield curve control, try and get the economy to run hot. I don't think they're ever going to get the economy to run hot, not for a while. While meaning maybe a decade or longer. And secondly, and then thirdly, it's to try and monetize debts in different ways by debasing your currency. Okay, so all of those three things are going to force us to migrate. Every one of those forces us to migrate. So we all migrate across. But we're now backwards looking. And we're all looking at this world behind us that's crumbling. And I'm looking forwards, and I'm a big believer in the Neil Strauss's Fourth Turning, the book, which I think, if people here haven't read it, they must read this book. It's exceptional, and it's prophetic. It's incredible.
And he talks about that.
Yeah, Neil's a good guy, and he talks about that new institutions, new regulations, new frameworks, new ways of doing things come out. So if you think the last time this happened, it was after World War II, everything from the IMF to the World Bank to the WHO to the United Nations, I mean, you name it, the entire rules-based global order system came out of World War II. So now if we look ahead, I've been putting a list because I'm writing Global Macro Investor this weekend. So what we've got coming in the next 10 years is probably the biggest thing we will ever see in terms of change. I mean, literally everything is about to change. So I'm actually getting very optimistic that I think we end with a whimper and not a bang. We don't blow up. We just transition. And we transition to something, it's going to be a different world. It's going to be hard to get our heads around. It's going to have social issues. If you're getting paid an income for not working, your propensity to feel worthless is pretty high. You're going to have to change structures of society. So I think a lot is changing here. So I'm pretty excited. And I think this whole digital asset space is just one part of the size of it. And it kind of all blends together.
Cool. That's exciting. Any other books besides The Fourth Turning that you would say must read?
Jeff Booth's book, The Price of Tomorrow. That's about the deflation of technology. I think that's definitely well worth reading because it captures the big picture. I think both Sapiens and Ex Deus, the two books, are definitely worth reading to just get your heads around where this is.
Raul is confident that the crypto space will experience a 200x growth, and his primary focus is on Ethereum. Those familiar with venture investing or startup investments are aware of the high failure rate among new ventures, and the same applies to cryptocurrencies. However, Ethereum has successfully moved beyond the unknown stage. One factor that supports its potential is the Lindy effect, which suggests that the longer a technology remains dominant, the more likely it will continue to be the leading technology. Ethereum has been the leading smart contract network for almost 8 years, giving it a path dependence advantage. What are your thoughts on Raul's 200x prediction for the crypto space? Do you agree that Ethereum offers the best risk-to-reward ratio? Share your opinions in the comments below. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.